What's up? Good afternoon. What a shitty day for trading. They ran up and did nothing basically the rest of the day. Traded in a very narrow range, very dull, very little volume. They did make up Friday's losses and then some. Oh, interesting. Okay, but I guess we're on to. It looks like we're headed to a civil war here between the left and the right. All of a sudden, lots of things going on. And of course, all the left states are fighting the immigration. Interesting. The no kings, all kinds of good stuff going on. But have you been hearing about this credit card deal where people are actually taking out credit cards and borrowing from one to pay off another and trying to rotate it back and forth, and they don't realize all the fees they're paying to do that? It tells me we're in a little bit of a trouble here, a little bit of an economic problem. But again, who am I? I'm just whatever. We got things going on in Israel. Uh, Another problem, and why aren't we just getting involved? Why do we not just step on Iran and get rid of them? Okay. I mean, there's a lot of nice Iranian people that I know, but the country itself is as bad as it gets. Okay. Why aren't we just taking care of it? Okay. You know that others are going to get involved. Why don't we just squash it right now? That would be my thought. Any thoughts to that? So, I mean, again, I look at this, this whole mess, and of course, you've got the New Jersey rep that went to jail with the ICE detention center. Jobs are getting worse. I mean, yeah, I suppose. I wish we would just take care of it, though. It's very sad, very frustrating, and a lot of innocent people getting killed. Uh, and of course, it's a tragedy. Um, but again, from the market standpoint, markets don't care. Okay, the markets cared when it had an effect on oil, which it really doesn't, which is another thing. Okay. I don't understand. We are the world's largest producer of oil. Okay. We just weren't using our own. Now we can use our own. Why would oil have such a dramatic effect when there's trouble in the Middle East? Just out of curiosity. Okay. I mean, it was up $10 at one point on Friday. Okay. But again, at the end of the day, markets don't care. Okay. The markets do what the markets do. And again, when you have light volume, you'll see it over and over again. Dull markets go higher. Okay. You can say they shouldn't go higher. They're overbought. They've been overbought. But just because they're overbought doesn't mean that they have to go lower today. Okay. They'll go lower eventually. I just made a bet with the captain. Okay. I'm going to lose another one to him. He says new high. I say we bet on 61.66 versus 6,000. I say 6,000 comes first in September S&P. Okay. And then, of course, we have off on Thursday for Juneteenth. Another moronic thing to do. Okay. Now, what I want to know is why can't we make President's Day the day after the Super Bowl, which coincides with a very near period of time when we always celebrate it, but yet we close the markets for Juneteenth. Can anybody help me with that? Can you explain that to me? Okay. I mean, I don't know. I don't get it. Okay, but I think it's a joke. There's no logic behind it, and let alone this one. This holiday always falls on the day. It's not like the rest of the holidays that are Mondays. This falls on Thursday. Okay, and not to mention that it is triple witching week as well. Okay, so and of course you'll have to make a decision on Wednesday if you have any short calls. So another spot of garbage that has to be dealt with. Um, So, but in the meantime, like I said, you can't fight. I traded very low. I usually trade on a busy day, I'll trade somewhere north of a couple thousand contracts. On an average day, I'll trade somewhere north of 500. Today, 91. Okay. So that tells you how little business there is. Get my rainbow wicks. Ain't that the truth? Okay. I mean, hopefully we'll get these things squared away, but it certainly is a tragedy what we're watching happen to the greatest country in the world. Uh, but hopefully our guy will straighten them out. I get a little sell off. It's amazing. Every time we get on Mondays, you get a little action. Can I go down to 6,000 in the next hour and 10 minutes? Anyways, so look, again, news isn't good, but it doesn't matter. Remember, you have to remember this. This is very important to remember. Everything about the markets comes back right down to the chart. And everything about the chart comes down to the time frame that you're going to trade. Okay? Does that make sense? It's always about the chart. It's always about the price action. And then it's about the time frame that you're choosing because different time frames can be in different patterns. Okay? A 4 minute could be bearish. The daily could still be bullish. But remember, the market, a long-term bear market or down market cannot start on a daily chart. It's got to start in the shorter time frames. Okay? That's something to always remember. We have to start always in the shortest time frame. The markets start from 1 minute, 2 minute, 3 minute, 5 minute, 15, all the way back. So a 10 minute could be in a downtrend, which it probably is right now based on what I'm watching, but the daily is still higher. The hourly is probably still higher. Okay, so again, you're trading a specific time frame. Whatever that time frame is, that's what you're watching. Okay. And you'll see that the difference, if we looked at every chart here on this board, most of them are either down or flat, okay, over the last couple hours, okay? But when we see the bigger picture, we'll see that they're still higher, okay? Universal price, there you go, right? All charts are the same, all patterns repeat themselves. The shortest time frame has to resolve into the longest time frame, okay? So the down market cannot start until it starts in the shorter time frames. It's that simple, okay? If you remember that always, you'll keep yourself out of trouble. And if you quit trying to time the market or tell the market what it's supposed to do, you'll be a hell of a lot happier. Okay. I mean, we try to take probability trades, either buy oversold conditions or sell overbought conditions. That's kind of what we look at. Okay. That's our thing. It doesn't matter about the news, about what's going on in the world, because really, other than quick emergencies, nobody really cares. And even Friday, the markets came back quite a bit from their lows. Ask the feeder cattle market. Ask the cattle market. Okay, I was so bearish on those, I finally just had to give up. Okay, took my shots and lost one, won one. But overall, I'm not going to fight it. I say the same thing on TV every time I'm on air. All right, I know you're ready, Connie, but I always have to ask. So, and I'm assuming since you're here, you didn't get attacked with your T-shirt on. Anyways, the dollar, Delta X-ray, very oversold. Okay. Now, again, whatever you think of the dollar, whatever you think that it's going to do, the probability is that it's going to rise from some point here. Will it be right here? I don't have any idea. But for now, I would say that 97 would be support. Okay. And 99 would be resistance. Those are pretty clear. Now, that does not preclude that we won't go lower. Okay. Again, we could go back to 88. We were at 88 cents once upon a time. Okay. But of course, this is more of a controlled market by the central banks and the Federal Reserve. But from a straight trading standpoint, 97 and 99. And the only reason we don't trade it is because it costs too much money for us to go to New York and trade it. Okay. Because they charge you $120 a month. Otherwise, I trade it. But we can just use the euro currency, which is the exact opposite. So even though the euro currency looks ugly here, okay, the true picture is it's higher and it's breaking out and we're still short and it's still overbought and it's been overbought for at least 2 weeks. And that shows you that even if you're in a condition that looks to be high probability, it doesn't guarantee a win. Okay. It will win more than it will lose. Okay. But it doesn't guarantee that just because you nabbed a market that was high probability, it doesn't guarantee a victory. Okay. I think resistance 117. I think support 114. Okay. And we're going to see some bigger moves here because I think you're going to start to see some more central banking talk. But this has basically gone straight up since last week, with the exception of Friday. Okay. The notes still in consolidation. Okay. We're still short notes, and you can see the 200-day moving average. You can see that 111 is still the resistance level. Okay. And probably on a 110. So we're getting into a much tighter range than we normally watch. Okay. Look, sometimes a market's not tradable. Okay. These are not even good markets for floor traders unless there's a lot of paper, a lot of order flow that we're just scalping off of. But if you're a floor trader, these aren't good markets. There's not enough movement. Okay. And you could make the case that you may be forming a potential head and shoulders. Again, I don't talk about those patterns. Hey, what's up? Okay. But again, I think you're 110 to 111. And again, I think we're going lower. I think interest rates are going higher. The bonds, which we are long now, okay, but they're the same to me. Again, I don't pick the direction based on my opinion. I'm long bonds. I like to be short them. I think, again, I told you last week I'd sell them at 114 as a trade, and I did, and they made a little bit of money. Okay, again, they're not huge because again, there's really not that much movement. But I would look at this market now, and now we're tightening up here too now, 112 to 114. So we've had ranges as big as 5 or 6 points. We're now down to a 1 point range in the notes and a 2 point range in the bonds. Okay. Now again, what does that mean? It just means that there's going to be a much bigger move coming when this finally breaks out of this consolidation pattern. Does that make sense? Does everybody understand that? The more compressed markets become, the bigger the next move is going to be. Okay. Bitcoin, nice move today. A nice little pop. But again, at the end of the day, what did we say Bitcoin was? 115 to 100,000. We're about dead in the middle, just a little bit past center point right now. We came down to 115, but before last week, we went up to 112. I could actually designate 112 if I wanted, but I think you need a little bit more room here. This is still a very volatile product. But at the end of the day, you've been stuck in a range for 3 weeks now, 4 weeks. Okay. Churning around. It looks great. It looks like it should break out. This could be a cup and handle pattern developing, okay, which is very bullish. So the next big move could be higher, and I don't doubt it. We happen to be shorted, but we're only shorted because we were short from up in here, from the overbought conditions. Seems to stick in these multi ranges every 10K. That's pretty much similar. I don't doubt that. Okay. And I would be surprised that someday we trade back to 50,000, and I wouldn't surprised if we trade to 200,000. Again, I have no idea where this is going to go eventually. I can only look at what it's doing now. Okay. It's just like people who get on TV and they say, well, gold's going to 5,000. Well, okay, it very well will go to 5,000 at some point. But I would suspect there'll be a lot of resistance levels on the way till it gets there. Same with Bitcoin. In the meantime, 100 to 115,000. Gold got clocked today after being up monster. Interesting enough, we had an outside day today. We traded higher than Friday and lower than Friday. So interesting. I would think this is a pretty negative pattern. Came right off the oversold conditions. We have no position right now, but certainly I think 3,500 is still the resistance. I think 3,300 is still the support, but I firmly expect to see this break below. Okay, bearish engulfing, a candle man. A candle man. Okay. So again, I expected to see it. Now we're getting a little bit more selling. So again, at the end of the day, if I were going to trade this, now again, remember, your trading has nothing to do with your long-term investing. Make sure you grind that into your head, okay, that you can be long gold, own gold in your IRA, own gold in your safe, own gold anywhere and be long it for the long term. But why not make a little bit money on the short term from the short side if you can? Doesn't that make sense? To have the opportunity to be make a little bit of money on the other side while you're waiting. Okay. Silver, which for short, was up a little bit today, but again, obviously got very oversold. We got short right in here. Okay. Again, a very narrow range once again. So this may be just another chance to see it pop up higher once again. I don't know. Okay. I would say silver is 37. I'd say it's 35 to 37. Okay. Originally I had 38, but now it's showing a lot of resistance just above, just below 37. So I think you're 35 to 37. Know your options. That's right. Platinum, which we don't trade, but as I did tell you that I would look for a spot to get short. I never did, just full disclosure. Okay. But it looks really solid. Now, again, the real key here in platinum is going to be 1200. If you own it or play it, 1200 is going to be a key spot. If it holds 12, it's probably going to take out the high again, the recent high again. But I think for now, for today, we're 1200 to 1300. Yeah. Copper, which we're still long, it's really just doing nothing. It's still 476 to 493. Okay. Again, surprising, but it is. Okay. Grain markets, again, here we are. We popped up. I expect it to come back down. We have not been able to break out of this range forever. Okay. And I expect it to continue. There's no action in those markets right now. They're dull, they're dead. So wheat would be 530 to 560. Corn, a little bit of a tighter range, but same principle, 430 to 450. And the soybeans, 1080, 1040. So the exact identical levels I gave you last week. Nothing has changed. Okay. And the question, everybody goes, well, why don't you just trade the range? I go, well, that's easy to look when the movie's over. Okay. It's easy to know how it ends. But do you really want to get involved in a market that is compressing? Okay. That you know a huge move is coming. And of course, those markets, especially, they don't trade overnight, but for a few hours. Do you really want to get yourself involved in a market that could explode against you? Okay. By the time it reopens, something to think about. Okay. I mean, again, I'm not a fan. Okay. I will say this: if I were going to do anything in the grain markets, I'd be a buyer. I don't see much more downside. Certainly it could go down. Again, I'm not going to say they can't, but I think the risk is to being short, not to being long. Okay. Cattle, well, there we are. Found the range 212 to 220. We're right in the middle of the range. Again, I'm not trading them right now. We don't trade them. I'm not trading them right now. This is befuddles me what's going on in this market, other than they're creating a little bit of a shortage. But 212 to 220, if you trade them. Feeders I never trade, but they're pretty identified. 305 to 315. Hogs continue to pop. Now here, let me just show you the July instead of the continuous contract. Now this is a blowoff, okay? But one of the problems is what? There's no volume in the blowoff, okay? We've been overbought since, with no relief since May the 25th. We've gone straight up. I will be selling hogs tomorrow, okay? I will be selling hogs tomorrow. Okay. If it gives me an opportunity, it's got to give me some down ticks to get in there, but I will be selling them. Uh, Here, let me go back to that for a minute. Double top and long-term cattle. I cannot, I cannot say double top. Remember, double tops work best in a downtrend. Okay. Double bottoms work best in an uptrend. So yes, by the definition, this could be a double top, but you're still a favorite for it to pop higher again than to get the move down. You want to sell into, I'll get to the hogs in a minute. You want to sell into rallies when you're making a true double top, which is the point. Okay. Back to the hogs. The question was, even with this volume, yeah, one of the things you learn about markets, okay, is when you get a move that's this sustained, this is 8 days in a row or 7 days in a row higher. So the volume in this case tells a story. It tells you that the buyers are running out of bullets. Okay. So again, I'm not saying it's going to work. Okay. But I'm willing to take, I think it's a 80% chance it's a winner, 20% chance it's a loser. And the beautiful thing is I can define the loss, and I don't know how much the gain can be. Does that make sense? This would not be the classic blow off I'd be looking for, but now when volume starts to dry up, that's something else that I start to look at. Natural gas, we have no position, continues just to churn. Again, still 340 to 380. So you're getting a repeat of a lot of the numbers that we give you all the time. Okay. Why? Because there's nothing to do. So if there's no change, what am I going to give you? Now, here's one I got hurt on. Okay. Shorting at 64. Okay. I got cracked the first part. Okay. And I didn't see, I was on the golf course when they hit 78. I would have sold them again. Okay. Uh, right. The probability of more buyers showing up is low. So here, okay, we've got a very wide range to deal with. I think you have to understand that support is at 68 and resistance is at 78. Okay. But I think you want to watch before I give you anything. I want to see how it reacts to this 200-day moving average. This could have been just a false breakout. Okay. Or it's going to continue to go higher. Okay. And obviously a lot of it has to do with what's going on in the Middle East right now. Okay. And any questions on part one? Okay. Just remember, we're seeing a market that is very challenging. Those who trade with me in the morning know how challenging these markets are. Okay. How little there is to really do. Okay. And even when the captain's not commenting too much in the chat room about trades to make, you know how slow it is. Okay. So once again, I urge you to be very cautious in here.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.